World Bank Group reviews $157 billion support to Nigeria and other countries. Federal government announces 4 new policies towards boosting food security. Prices climb to highest in years as COVID recovery, power generators stock demand. Plus, Business Express takes a look at the global supply chain crisis amid COVID-19 recovery. Details of this and more on Business Express on the network service of the NTA. We are reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. Now let's begin with food security. The Federal Ministry of Agriculture is set to implement 4 new policies towards boosting the country's food security. The policies, as unveiled by the Minister of Agriculture, Mohammed Mahmoud Abubakar, aim at actualizing food security within 2 years. The policies include national agricultural technology and innovation, expected to be effective between 2021 to 2025. Another policy mentioned by the minister is the National Policy on Agricultural Extension and the Policy Implementation Strategy. The ministry will also partner with Presidential Fertilizer Initiative to ensure adequate domestic production and marketing of NPK at affordable price to farmers.
The ATA was built on the principle that agriculture is a serious business. Actually, eating also is a serious business and should be supported. It focused on making Nigeria's agriculture more productive, efficient, and effective, creating jobs, generating foreign exchange, and reduce food importation, while the APP was designed to address 2 main challenges: the inability to meet domestic food requirements and an inability to export at levels required for market success. Like ATA, the APP also centered on food security, food substitution, job creation, and economic diversification. The upcoming NAPTIP is developed to provide an integrated approach to agricultural development in terms of access and application of improved inputs, linkages between agricultural research and training institutions, input provision for farmers, agricultural mechanization, extension services, provision of rural infrastructure, access to affordable funding, climate change management, and suitable agriculture, nutrition, and finally, security of agricultural land and investments.
Now to digital economy. The Minister of Communications and Digital Economy, Issa Ali Pantami, has assured the technology community that he has forwarded the Nigeria Startup Bill to the Attorney General of the Federation for onward transmission to the National Assembly as an executive bill. The minister, who gave the assurance while delivering a keynote speech at the virtual Nigeria Startup Bill National Stakeholders Roundtable, a pre-summit event of the 27th Nigerian Economic Summit, further expressed support for the proposed legislation, which he noted would advance the implementation of the core mandate of his ministry and entrench the overall goal of the President administration's to fast-track employment generation and wealth creation by Nigeria's youth filled with technology-driven innovative ideas. It says the Nigeria Startup Bill is a step in the right direction towards supporting the scalability prospects of Nigerian startups. The World Bank Group has assessed its $157 billion support given to Nigeria and other developing economies to fight COVID-19 pandemic. Nigeria got $3.4 billion support from the bank in May to strengthen the economy and support recovery from the pandemic. Speaking to the bank's development committee at the end of the World Bank and International Monetary Fund IMF annual meetings held in the United States, World Bank President David Malpass said from April 2020 through June 2021, the multilateral institution committed more than $157 billion, the largest crisis response and fastest growth in its history. Malpass said the World Bank is providing financing for COVID-19 vaccines in 61 countries and currently have 250 million doses under contract with World Bank financing and partnering COVAX, AVAT, and the African Union, as well as UNICEF to accelerate the purchase and deployment of vaccines in developing countries. Gold falls as stronger U.S. bond yields dollar way. Let's see prices of other commodities. Joining me to discuss the global supply chain disruptions amid COVID-19 recovery is Ogbonna Okuku, a development economist. You're welcome to Business Express.
Yeah, thanks for having me, Musa.
Okay, growing consumer demand and product shortages, crisis in supply. How do we get to this point? How did we get to this point?
Anyhow you want to look at it, it's something that it's happened to everybody. It's happened to all other other climes. Global value chain was actually affected generally with the COVID hitting the entire world, and that production was affected. Logistics was also affected. Raw material supply was also was affected. So generally, it affected every person, every player who was actually involved in, who participated in the value chain. So supply, distribution, production was generally affected, and although things are beginning to bounce back, basically even commodities like crude oil and stuff like that actually got got a hit from the COVID. So I mean things are beginning to bounce back. The crude oil price has gone up as high as $80, and also it shows that things are coming back. But the COVID also made a lot of organizations find better ways to do things, more efficient ways to do things. So a lot of things have changed really, whether I would like it or not.
Okay, Nigeria at the receiving end of virtually almost everything that's coming into the country. Could this be tied to inflation? I mean, the inflation we're seeing in the country.
Now, a couple of things, get involved when we're talking about production. The when you look at cost of doing business in the country, you look at the cost of funds, you look at the cost of cost of labor. How efficient is your system? Those are the things that actually drive high the cost of production. So the inflation you see today, is as a result of some of these factors that actually make it a bit difficult, make it more expensive to produce a lot of things here in Nigeria. Road infrastructure, logistics, these are things that that actually affect the cost of production. So the inflation you see is as a result of cost of production, cost of transportation, and then again.
But we also import goods into the country.
Yeah, that's what I was heading there. I was heading there because whether the FX market, the foreign exchange market, it has been affected too. So with the high cost of high rate of exchange rate of dollar to naira, it also and since you're importing a whole lot of things, so it will have a toll on the cost of goods and services that you're bringing into Nigeria.
Now, we have information that in other countries they are experiencing product shortages, and it might likely reach Christmas, because we're approaching Christmas. And how will this affect the international trade dynamics?
It will affect it will affect the dynamic. When it comes, like I mentioned earlier, when firms from different countries, pool resources, that sequence of pulling resources together to produce a particular product, which is the global value chain. When a particular component is affected, it affects the entire chain, because if COVID hit countries that raw materials come from, because a lot of countries that export, raw materials like agro products, Mozambique. You look at countries in Africa like Mozambique. You look at Cambodia, Vietnam. These are countries that who participate, highly in the global value chain. So if COVID have hit these countries, and then definitely there'll be shortage, because that amalgamation will not happen. That sequence will not be, with the free flow of that sequence will
now
be there.
Could this get worse with Christmas around the corner?
Of course, you definitely get higher, because whether you like it or not, everybody, the purchasing power, with or without increasing your purchasing power, everybody wants to buy, because it's the end of the year, people cash out their investments, from even the money markets. They take some of their profits, they do a lot of profit taking to just to make sure that they have that holiday with their families. So a lot of that shortage will be significant.
Okay, should the world be concerned about low taxes as well as cheap labor, because this is mostly attributed to cheap labor and low taxes in China. That's why most of these companies are now citing their production in China. Should we be concerned, or should we take advantage of low taxes and cheap labor so that we can draw attention away from China?
Now, it's beyond low taxes in China, because for example, we have tax holiday here that we give to people that are setting up certain industries in Nigeria. You have 5 years tax holiday given to you by the Nigeria Investment Promotion Commission. Even if you are producing in the export processing zones, you actually have those tax holidays. So it's beyond the tax regime, really. Cost of production, there are a lot of things that are involved. You need to look at, do you even have do you have enough capacity when it comes to technology for people that will run the plants or run whatever production line that you want to start doing here or you're doing here. So China spends so much on getting their people educated, which is one of the things that you must do if you want to deindustrialize. China spent a lot of monies making sure that they do their infrastructure. They have good infrastructure. When it comes to ports, China, they have one of the best ports when it comes to seaports and all.
But why can't we do the same thing?
Yeah, these are the things, basically, okay, you see, Nigeria is trying to do railways. Now, we don't have those kind of long-term funds to do railways from private investors within the country. Now you're doing loans, and a lot of people are shouting, "Wow, we're borrowing so much to do railways." These are infrastructure that at the end of the day that you concession tomorrow is an investment, because investors look for strategic assets like that. But there has to be a test case. There has to be something that will show that it's viable to do railways in Nigeria. So before now, we never had railways, and these are things that would definitely support your industrialization if you want to diversify your economy. So right about now, like I was saying, China invested a whole lot in infrastructure. Now, China, invested so much in getting their people to have that critical mass of knowledge, knowing that they also have a role to play when it comes to industrialization. The 70% or 60 to 70% of buttons used in the world comes from a city called Button City in China. Now, they looked at the comparative advantage that they had, and they concentrated. And this brings me to the next issue. The subnationals need to also know the areas where they have comparative advantage and begin to plug themselves in the national development plan of the country, so that they can have that merger and begin to produce something that will be known for. Our country has to be known for something.
Now, how can we make sure that this doesn't happen? Because right now it's a serious problem for lots of countries.
Now, what do? You see, you can't really twist people, but it's just getting them to understand and getting into their heads, making them understand that these things for our own good. We have to be able to build a nation for our children. We need to be able to do things like other people do, and then get things to work. Because if you want to create, you want to generate employment, you want the disposable income of your people to be reasonable enough for them to be able to have that purchasing power to live better lives. I'm talking about the people at the subnationals. You need to be able to plug with those at the federal who keep designing programs, bringing out, turning out programs like the Anchor Borrowers program, SME funds, SME banks, all those kind of things.
What about diversifying the supply chain?
It all boils down to the same thing. Everything plugs into that sequence to make sure that we become a bit more productive.
But what does this mean for Nigeria moving forward? Because we tend to be more of an import-oriented country then.
No, it goes to show that we have a whole lot of work to do. Okay, the managers of the economy need to, see things from, if need be, if you need to beg people, beg them, because we all need to be on the same page to make sure that we actualize the diversification program, of the present administration.
Okay, thank you very much, Mr. Ogbonna Okuku, a development economist. Thank you.
All right, thanks for having me.
Yeah. Now, the federal government has continued to create platforms for access to finance and markets for micro, small and medium enterprises in the country. The latest is the planned establishment of an MSME's microfinance bank and the development of agro-processing zones across the country. Minister of State for Industry, Trade and Investment, Mariam Katagun, disclosed this at the 2021 Commerce and Industry Correspondents Association of Nigeria annual conference in Abuja. Benny Adams reports.
If you go to the market in the morning, in the evening, the price has changed.
And I will be happy if the government will help to give me the loans.
Mariam Katagum says this is about to change as the federal government, under the Economic Sustainability Plan, has continued to create platforms for access to finance to boost production, increase the value and volume of trade, and enhance the business environment with a view to attracting investment. She is also quick to add that the implementation of the 75 billion naira survival fund is on, with 4 out of the 5 tracks already concluded.
So far, approximately 58 billion has been disbursed directly to the above beneficiaries.
Also in the offing is the planned establishment of an MSME's microfinance bank and establishment of agro-processing zones across the country.
In that respect, under the 2021 and 2022 budget, which we're looking forward to, my ministry will roll out the development of these agro-processing zones in each of the geopolitical zones under the first phase of the intervention.
Speaking on the role of Nigeria's MSMEs, export commodities, trade and investment in stabilizing the post-COVID-19 economy, stakeholders in the economy are optimistic that the nation's recovery process is gaining traction, leading to Nigeria's automobile industry exporting vehicles to other African countries. In Abuja, Benny.
Now, over 66% of domestic gas supply in September 2021 was produced locally, according to the Petroleum Products Pricing Regulatory Agency. The General Manager, Corporate Services, Kimchi Apollo, who made this known in a statement on Sunday, explained that Nigeria produces locally a major portion of the LPG consumed in the country. He attributed the feat to the enabling environment created by the federal government through its programs and policies to attract investment into the entire gas value chain. The statement noted that the report on LPG supplied in September 2021 indicates that out of the 76.5 million metric tons of LPG supplied nationwide, 49.4 million metric tons was locally produced, while 27.1 metric tons was imported. Oil prices hit their highest level in years on Monday as demand recovers from the COVID-19 pandemic, boosted by more custom from power generators turning away from expensive gas and coal to fuel oil and diesel. Brent crude oil futures rose 63 cents to $85.49 a barrel after hitting a session high of $86.04, the highest price since October 2018. U.S. West Texas Intermediate crude futures climbed 95 cents to 83 cents 23 cents a barrel. $83.23 a barrel after hitting a session high of $83.73, highest since October 2014. Both contracts rose by at least 3% last week. Now, a quick look at the markets in the week ended with Bosode Eba.
Investors in equities markets gained about 328 billion naira in the trading week ended Friday, October 15th, as the markets maintained bullish momentum across the 5 trading days. The NGX All-Share Index and market capitalization appreciated by 1.39% and 1.54% to close the week at 41,438.15 basis points and 21.6 trillion naira. A total turnover of 2.8 billion shares worth 31.6 billion naira in 23,355 deals were traded in the week by investors on the floor of the exchange. All other indices finished higher, with the exception of NGX ASM Index, which closed flat. The financial services industry led the activity chart with 2.4 billion shares valued at 26.4 billion naira, traded in 13,884 deals. It was followed by the consumer goods industry with 170.4 million shares. The third place was occupied by the conglomerate industry with a turnover of 68.9 million shares valued at 133.3 million naira in 625 deals. The top 3 equities were FBN Holdings, Guaranty Trust Holding Company, and EcoBank Transnational Incorporated. They jointly accounted for 1.8 billion shares worth 23.3 billion naira in 5,981 deals. Exchange-traded products had a total of 135,084 units valued at 2 million naira in 17 deals, as well as a total of 19,603 units of federal government bonds valued at 21.1 million naira traded in 19 deals. For summary of price changes, 45 equities appreciated in price during the week, 15 equities depreciated in price, while 95 equities remained unchanged. Boss said the Able Business Express.
Next is Global Market Review.
Hello and welcome to the Global Market Review. Global markets are gearing up for more earnings this week, following a stronger than expected start to the earnings seasons in the United States last week. U.S. stock index futures dipped after major averages posted their best week in months amid stronger than expected start to earnings season. Futures contracts tied to the Dow Jones Industrial Average dipped 0.38%, S&P 500 0.46%, and Nasdaq Composite also dropped 0.55%. Stocks in Asia Pacific mostly slipped on Monday as investors reacted to the release of key Chinese economic data. In mainland China, the Shanghai Composite depreciated 0.12% across 3,568.14. The Nikkei also depreciated 0.15% at 29,025.46, while Hong Kong Hang Seng Index topped 0.31% at 25,409.75. European stocks pulled back on Monday as global market geared up for more big earnings reports, with most stocks in the tight grip of the bear. African markets also trade same negative sentiments as their global counterparts, with stocks like South Africa's JSE Africa Top 40 and Ghana's GSE Composite posting on a negative note, while Nairobi's All-Share and Tunisia's Tunidex have been muted all day. That's the Global Markets Report. I am Boss Sede Abel.
Well, that's it. Business Express returns Tuesday by 9:30 a.m. Thanks for watching.
NTA Parliament is a dedicated 24-hour channel that broadcasts the activities of the Nigerian Senate, Federal House of Representatives, and all the 36 state houses of assembly. NTA Parliament, strengthening Nigeria's democracy.
Information is power. Everyone wants power. So feel powerful with the NTA News mobile app, the one-stop information center. Real news at your fingertip. Be the first to report by uploading first-hand information on the U-Report link, and be the first to know by simply clicking on any of the links on the sidebar for headlines, domestic and foreign news, economy, security, politics, sports, and more. Stream live on your smartphone and tablets and stay connected. It's pretty